of action for Titan going from here, speaking about a huge headroom for market share gains as well at 60 times plus valuation. How much juice is left in the stock? We'll leave that to our next guest because it's the FMCG space which has been in focus over the last two trading sessions. A big move is what we've seen in a lot of these staples names, be it HUL, Dabur, Britannia, or even the smaller names like Imami and Jyoti Labs. Naveen Trivedi, who's the Senior VP Research Analyst, Consumer and FMCG Institutional Equities at Motilal Oswal, joins in now with his call on the sector. Naveen, first we congratulate you for the call on the sector. In fact, you were the one among the first few ones to turn bullish on the sector way back in April itself on the back of strong management commentary and risk reward on the space. And now it's been peppered with, the recent up move that we've seen in the stocks, with the street looking at this space as a possible portfolio reallocation as well. What's interesting in your note is that despite this up move, you believe that there is case for re-rating beyond what you've earlier estimated. You say that you estimated high single-digit volume growth for FY25 and FY26 with an upside risk to that. So could you explain that to us? Where does that optimism come from?
Yeah, sure. Thank you so much, Mangalam. If you look at the even the last quarter commentary also, where some of the management had highlighted about the recovery in the quarter four in the rural side has seen a meaningful pickup. And if you look at the amount of drives which the companies are working around the distribution side, new launches side, the once you start seeing the overall recovery, all other initiatives will also adds up in terms of the volume growth, which we so far we are building up around a high single digit sort of a growth rate for most of the names. Our take here is that we so far has not added the advantages of. If you see the rural side, the monsoon is also in their favor. If the crude side also basket has seen in their favor. So there is still a room where they can still pass on more benefits to the consumer, to which if you look at last 2 year context, where the lower strata level where the consumption was under pressure. Once you see that the pricing side, some benefits if you pass on to the rural side where the consumption was muted for last 2 years, there can be further levers in terms of the more volume pickup in the coming years. And thereby, even in our note, we highlighted about that. So far, we are not building up a double-digit volume growth case, but yeah, high single-digit volume growth sort of number is expected on our cards.
Okay. All right. Naveen, how would one justify the valuation of around 49 times 1 year forward when it comes to HUL?
Sure. If you look at the last 5 year average P multiple for lever is close to 60 times. And then we have seen last 2 years of underperformance of the entire sector, including lever. If you look at the volume side recovery, if they sustain this sort of a meaningful reversion in the volume growth side, the confidence level will also goes up to the valuation side. So far, we are seeing that some amount of sequential improvement has happened in some of the cases in the quarter four. If this sustainability trend sustained for another couple of more quarters, the valuation gap which was there for around 15 to 20% for most of the names, which even Mangalam highlighted about Dabur, lever, where we have seen there was a meaningful multiple correction has happened. Once you see the earnings side improvement, the gap will further narrow down, which we have seen last two trading days also. It is covered up to a bit, but if they sustain the volume growth trajectory, I would expect that the gap will further narrow down.
Right. When you had written the note, it was April. From then to now, the stocks have seen a rally of anywhere between 5 to 15%. The last 2 days in particular itself, even if you account for the profit booking that we're seeing today, these stocks are up around 8 to 10% as well. How much more upside do you see over the next few months, the 1 year that we foresee from here?
Mangalam, I would say it will be again a very specific counter to counter depending on how these companies can drive the volume growth, and on top of that, what it looks like more sustainable volume growth sort of a trajectory. There may be a case where some basket will see a more channel filling, some basket will see more seasonality in their favor, but the company who can really demonstrate more around sustainability for the next 2 years sort of a time frame, 2 or 3 years sort of a time frame, I would expect that those counters will sustain the rich valuation, and then there is also a possibility of earning upgrade on that sort of a company. So I would expect that leave about a monthly up and down, but looking at the slightly F25 and 26 sort of a time frame, I would still expect that there is a decent upside in across staples. So our topics are in the staples are Lever, Dabur, and Godrej consumers. Although like we are generally bullish on the staples and we remain overweight on the staple side.
Okay. What is the risk according to you, probably in terms of your earnings estimate now?
Uh, as of now, until if you look at the again the monsoon side, if there is any slippages or maybe the RM basket, if there is any reversal sort of a thing, as of now it doesn't look like. But if there is any slippages there which can impact the rural consumption, that is a risk you have to look at in the numbers.
All right. And, usually what IT analysts do is separate the IT companies into two buckets. You have the large cap IT names and then you have the mid cap IT names. Mid caps, of course, have a lot more delta. In FMCG, do you think there is case for that now? Because your top picks you've stated as HUL, Dabur and GCPL, can put them in the large cap bucket. But then you have the second rung of names which are doing extremely well as well. And they trade at a significant discount to these large caps. You have the likes of Emami, Jyoti Lab, you have Bajaj Consumer, you have that entire basket. So is there anything in particular that you like from that basket?
So Emami also we have buy rating on, and I would expect that the seasonal tailwinds also will favor to both the portfolio, summer portfolio and the winter portfolio. So F25 will be the year where they can deliver the volumes growth side of our outperformance. And on top of that, this is one counter where the valuations were always on the lower side. Because the top of the brands were always looking like a user addition as a problem. They've acquired some businesses in the last 1 to 2 years sort of a time frame, and on top of that, if the core portfolio start doing well, I would expect that there is also a possibility of a multiple revision in the Emami where the multiple were used to be less than 30 times. So that can be a case for Emami if they sustain the beyond seasonality sort of a play also.
All right, so there is case for multiple re-rating on Emami as well. Final question, since we started out by listening to what the Titan management had to say to us, and you were at the Titan Analyst Day as well, what do you make of that space right now? And would you prefer Titan over Kalyan and Senco, or is it the lower level stocks, that the lower players that you would prefer over Titan right now, given the valuation discount?
Sure. Mangalam, in the jewelry space, we only cover Titan so far, so I will only restrict my comment around Titan. Jewelry we like within discretionary, where we are still seeing the growth is not a concern area. The concern area was on the margin side, which also Titan had highlighted in their analyst meet, and they're highlighting around 12% EBIT margin for the jewelry business. I would expect that even if they can maintain this sort of a margin, and if they can sustain a growth drive, which they have last 3-4 years, 5 years, they could demonstrate on the jewelry side. We remain on the bullish side on the Titan also. So growth side, the concerns are not as high versus the margin side, which also I would expect that 12% level has a lower risk if they get of slippages side.
Okay, all right, Naveen, we're going to let you go on that note, but extremely comprehensive discussion there on the entire FMCG space, which has really been the toast of the market, but coming off today, so rightly so, some amount of profits probably being taken off the table. So HUL, for example, is down around 2% at this point, is your top loser on the Nifty. We'll take a short break, get you more on the markets, lot of stocks in focus. Stay tuned.